Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good day, all. Ira Epstein with your metals update, and this is for Thursday, and we are now at the 19th of April, 2018, and we're about 2:45 p.m. Central Daylight Time. Just on Fox News, ran upstairs doing this for you. It was the shortest interview I've done in a long time. In my earpiece, they're going, it's got to be short, Ira. We were just talking about Syria. Nikki Haley, did Steve Mnuchin, they had done a live interview, or a recorded one that Liz Klayman had just done, trying to find out why Nikki Haley thought the sanctions were coming, and they didn't. I have my own answer to that neither Liz nor Brett Hume answered, and let me say what I think it is. I think Russia was rewarded. You heard it, rewarded for not firing their missiles at the U.S. and letting the U.S. and its allies make the Syrian air attack. And I think overnight that was the decision that the president decided to go with because they didn't get hit. Very important. Okay, so what's going on in the metals? Because this is a down day, obviously, as you can see. Well, these markets have lifted up, and probably the most impressive look up to the upside that's happening is in the silver market. It has really moved against the gold, number one. Number two, is this a long-term bottom that is formed? As a chartist, it certainly has all the hallmarks of looking at it. Where would we be wrong with that thought process? Well, the hallmark would change if you made a new low for the year, which is, I don't know, 75 cents away. It's not all that much, but it's a reasonable amount. The gold market keeps running into, and I've been writing about this all week. In fact, I've been writing about it a long time. That 1355 to 60 level, 70 it once got up to, somebody's dumping a lot of gold, holding this market back. Every time it gets up there, it quickly retreats. It's like somebody's number that they're trying to get out of something. I don't know what it is, but obviously it's selling of some type in the market that keeps taking place. You have a stronger dollar today, weaker currencies. Okay. And no sanction talk right now. Denuclearization talk out of North Korea all over the news. Gold's holding up well. If you look at interest rates today, interest rates, look at how this market's going. Your 10 years pushing 292, and yet gold is holding up. Now that's weighing on the stock market, and I just spoke to Fox News. I was saying you got to look at that 2-10-year yield. Admittedly, we'd been up near 3% in January. It spooked the market. The second time doesn't unless you close over 3%. That's my viewpoint. If you take a look at the weekly chart, you're still over the 18-week moving average of closes in red. That gives the market upside bias. This is just a chart of closes. So far for the week, you're up $1.4. We'll see how the market finishes out tomorrow. When I go to a daily bar chart of just prices, you can see how the market had this one spike, but remove that and just look at this 1360 level. And look at how when the market got up here before. Each time it's lifting up, somebody's dumping the gold, holding it back. Don't know why, don't care, but it's something I can see. When I look at the swing line, I'm in an uptrend, higher lows, higher highs. Where's the market in relation to moving averages? It's holding the key moving average. Now it's 1344. If you look today, you hit 1343.20 and you came off that. The trend is up, the bias is up. Let's assume the market breaks tomorrow. Let's assume it gets through 1340.20. Would that turn the trend down? The answer is no, if you believe that a trend, an uptrend, is made up of higher lows and higher highs. What you could have is a higher high, but then a lower low. Yes, there's support, 1324 down to 1309. And when you put the Bollinger Bands on, the support's even stronger at the 1325 combination with the 100-day average of closes. Let's assume this market gets over 1359 again. Next resistance, 1363. I'm still watching this whole area. And momentum is flat. It's not going up. It's not going down. This has been part of the problem the market's had. Remember, I think momentum leads price, and there is no momentum. It's just sort of drifting right here. In the ETF of GLD, you have flat momentum, the same pattern, higher lows, higher highs. You made a run yesterday. If you take a look, you got as high as 128.54. Didn't quite hit the upper Bollinger Band. You did it back here. And where would you think support is if the market pulls back? I would say the 18-day average. Admittedly, you didn't hit it. You got to 127.13, but it's in the ballpark of that 127.02. Like the futures, if you take out 127.00, you have a higher high and low pattern with support about $1.50 lower. The stronger of the markets has been the gold miners. And I keep looking at what's going on in momentum. Now, both numbers are over 80 today. Were they yesterday? They were. Were they the day before? No. Tomorrow's a big day. If you get 3 days in a row, I label the market as converting from overbought, and any reading over 70 is overbought unless you get 3 days in a row over 80 on this indicator. Then I say it's converted to what we call embedded, locked in, whatever you want to call it. Then you'd be waiting to see if the red line ever turns back under 80 or when it turns down. You get these from time to time like you had here, and it's often accompanied by the market trying to move higher. When it breaks apart, the market often breaks down. Now, here you had divergence. You had the market shoot up, but if you go back, you'll see why that divergence happened, and go to pieces of news. I'll give you the secret. If the market loses and gets under here, the 22.67, then I'm going to look for support at 22.50 to 34, but it will have stepped out of its uptrend at that point. I had stuck my neck out on TV saying that another person, I didn't agree. They kept saying inflation's going to kick silver sharply higher, and I look at history. And when something's overdone, it's overdone. And I think any number over 80 in silver based on history, recent history, I'm not talking 5 years, recent, my lifetime. 80 to 1 is a big number. 82 is an even bigger number. Now you're back to 78. By the way, 78's a big number historically. These ratios, I remember trading them at 20, 30 to 1, even lower. So not that old. I remember that. Now, silver's getting a lot of press right now, an awful lot. I saw it. I've seen my own brokers are talking about it. They're looking at this market right here, and they're saying this is a big-time bottom. I can't argue that. More important to me is that the market's back over this 200-day average. And if you've been following what I've been talking about, when we got up here and we got over it, I said it's the first time. I don't know if it'll hold. Well, each time it keeps doing it, it's no longer the first time. That's the point you got to start looking at. You go back in time to see where that average was, and you can see how it got there and it fought. I can take you further and further back. You start looking at things like that. Does it mean it has to keep running? No, but this market's not acting bearish. That's the important thing. And supports in layers on the downside. Is it overbought? Definitively. Is it over 2 days in a row, the upper Bollinger Band? Definitively. Staying over the Bollinger Band, this black dashed line there and here. It only occurs 5% of the time. And when you do each successive day and you add them to it, I subtract 1 percentage point for each successive day. So tomorrow you got a 3% chance of staying over that number. That's all it tells me is maybe that's not a zone you're looking at. But I think the bulls, there's just so much bullish news I'm seeing. So I read a report today on a short squeeze that they're looking at the open interest report tomorrow to see what is going on. Did people put on new shorts? Are they getting caught? I can't answer all that for you. But what I look at as a chartist, I take the name off the chart. I forget this is silver. And I'm just saying this market's got all the hallmarks of trying to make a big base. In the copper, you are overbought. You're fighting a battle at the 100-day average of closes in the upper Bollinger Band. You're getting thrown back. And that makes sense, okay? You got 10-year notes going up today to nearly 2.92%. People are getting nervous, so they get a little pullback. But if you're looking at metals as a whole, and you're looking at what happened in aluminum, nickel, and we know that the prices there took off because of the sanctions on Russia, but you still got good economic data. So people are looking at it. What changes the picture in copper and negates this bullishness? In my opinion, taking out 304.40. We're overbought. We've hit upside targets. A stall might happen. In the platinum, you had an outside day down. The importance of that to me is it occurred right at the upper Bollinger Band. Momentum has not turned down. It is stalled. You have a lower low, a higher high. But what did occur is you had here, right here, an outside day down, met by a market reversal that took out, and it created an outside day up, and you took out this high, 938.20. When that occurs, I look for the market to make a move to the closest Bollinger Band or moving average. Well, here's both of them. So it's the Bollinger Band. Hadn't quite hit it. Doesn't mean it has to, but this is what I look for. And bang, it hit it and falls right back to the 18-day average. Now you're starting the game fresh. If today's high is taken out on Friday or Monday, be careful. You could have a bear trap here that carries the market higher. The odds favor the market's going to try to just play around there. In the palladium market, you got up to the 100-day average, the upper Bollinger Band. To see profit taking set in? Why not? You've had a heck of a run. Look at the higher highs, higher lows. The importance of chart tools is giving you an idea of direction. You're not trying to be the hero. At least I don't think that the way you make money in futures is trying to be the bottom picker here or the top picker there. It's trying to stay in the trend if you can do that. In the dollar index, the trend has been down. You can see today we got to 89.71. What did that do? And that, by the way, that's happened just as I was getting ready for the show, so a new high occurred. It knocked out this 89.67.5. So now you have no trend at all. You have a lower low and a higher high. This just happened. It wasn't there when I was prepping for putting this out for you. You've negated that, but look at, do you see the sideways action? That's what's going on. There's going to be a heck of a move out of that. The trick is trying to catch it. Now, I'm going to hold a live webinar on Tuesday. If you did not already get the email, it means you're not on my mailing list. Call my staff. That's the only way you're going to get on it. Call the staff at this number. It's at 1 p.m. Central Daylight Time. You need the invite link and the password, which comes in the invite from us, all right? You have to get it, and the seating is limited. It fills up. The webinar lasts anywhere from 35 minutes to an hour. You can drop in, drop out. You get to ask questions of me, and I will do my darn best to answer them as best as I can. So here's how you get it. If you haven't tried my research, do so as well. I'm Ira Epstein. You have a good day.